Deven Choksey joins us. Let's connect with him. Let's take our conversation forward. Deven, good morning. Thank you for joining us. US markets are down. Nasdaq is down 4%. Bitcoin is down. Tesla is down. Should we worry about all that?
Good morning. Well, I think the corrective strategies will have to be played out in the auto sector. When you look at how the auto sector in Germany is being played out, how it is being played out in South Korea, how it is being played out in Asian countries, including Japan, and also in America. I think against China, each one of them are probably having their own challenges as I see it. Chinese have probably, I think, disrupted significantly through the EV segment, be it including BYD or if for that particular companies like Xiaomi, which has been known for its cell phones. I think those companies have disrupted big time, not only on the engineering side, but also on the experience side of the vehicles, I think, which the user is using. And that's where probably I think we are seeing the challenge happening for majority of these manufacturers, the OEMs in the global market. How they reposition themselves, how they reinvent themselves, I think is going to be the key as I see it. And that's where probably I think in the near term at least, I think we see the dominance of China over the other parts of the world. Not forgetting other aspects, but they are also the suppliers of the machinery to the vehicles that they are producing in the electric vehicle segments, which majority of the world are buying now today from them. So frankly, the dominance is end to end. I think from the grassroots level, the factory to the consumer experience in the showroom. I think everywhere the dominance is happening in China. So certainly we are looking forward to some disruptive times, if I may have to add a word, in the auto sector. And I think global players will definitely require to I think reposition themselves against what China is offering today.
Okay. Have we hit a bottom in Indian market, Devan bhai? Because last couple of days, some life, like they said, थोड़ी जान आई है वापस.
Yes, I think थोड़ी जान आई है definitely Nikunj, and the reason is very clear. The dollar, which was the spoil spot, I think is probably I think stop appreciating. On the contrary, it's other way around journey happening now. And as a result of it, consequentially, the other currencies, including the emerging market currencies in India as well, I think the depreciation of the currency has stopped. So that's the first level of protection for majority of the global traders, stroke investors who are looking at the stable currency. Should the stable currency be available to them, certainly they don't want to pull out the money from a market where the growth is seen, growth is guaranteed out there. So in my viewpoint, I think the panic has been out of the market. I think the market has seen the panic that's gone. Maybe I think some small drop may have been left out because of I think some exit of some of the larger players happening due to the collateral damage. That may be a possibility, but not across the market. Should that be the situation, I would like to think that I think the current bottom that the market has made on the Nifty probably should be seen as a bottom. I think it will test, even if in case I think the market has to further go down, it will test that bottom well. I would like to think that the quality fundamentals in the market, they are available now at a competitive price, if not bargaining mid cap and small cap. Certainly the bargain is happening in the last term. So definitely we believe that I think it's a good time to add the stocks into the portfolio and stay invested for 2 years and above.
At wire stocks, Kia Industries, maybe to some extent Polycab, Havells. Now it's about 2 weeks, you would say, that markets know that competition will intensify in some of these stocks. So that's yesterday's graph, please. Let's look at, let's say, the 1 month, because that in a sense will capture where they were versus where they are and have they really recovered. So 3,900 has become 3,000. So there is no recovery in sight in Kia industry after that meaningful build down. News still down 20% on the month, for the month. Polycab, very strong in terms of brand, but again, it recovered from that trough it sort of made. After the Birla news came out that they will move into the wire segment. And then you got Havells, which has fallen the least, because Havells also, apart from wires, they are into refrigerators, so not refrigerators, they bought Lloyd's, so how can they be in refrigerator? They are into air coolers, they are into lighting. Wire is one of the main businesses, but not the only business. Unlike Phenolix Cables, which is very large in terms of B2B, Havells is very big in B2C and Polycab is very big in B2C. Then by a good time to look at these beaten down wire stocks, because yes, we respect that Mr. Birla and his group is entering into the wire space, but that is still 2 years out. And it is not that they have the right to win.
Yeah, Nikunj, I think a while back till I think the stock prices fell for most of these cable and wire companies. Out of the total market cap of this particular group of companies of about 1,40,000 crores, Polycap was somewhere around half of it, that is 72,000 crores. And when you look at the entire fall happening in this particular sector, believe that I think the fundamentals are absolutely strong and convincing for most of these companies. Even if I think the larger players like Villa have to enter into this market, I think these companies have got a deep roots already established into the market. Polycab and Phenolics kind of companies have a retail reach. I think as far as the retailers are concerned, which sells their products, I think is a significantly large amount. I think that they have created. Hard to replicate and hard to replace them. I think in a shorter period of time, unless they do nothing in their business. In my viewpoint, I think the business is steadily growing at around 15 to 20% rate of growth, and that's a good sign. And as a result of which, I think the current correction in the stock prices, they used to go somewhere in the price earning ratios of 60s. Today they have started coming down, and they have been Polycap kind of companies now I think available in 30s. Phenolics kind of companies available in now I think the tens. I think there's below 20 times price earning ratio the stock is quoting. So in my viewpoint, I think, and I'm talking about 1 year forward. So in my viewpoint, I think these companies are definitely I think, looking good from the earning opportunity point of view, as well as I think the correction in the price is protecting you from the downside. So certainly gradual inclusion into the portfolio and adding into the portfolio is recommended from current levels.
Deven, have to ask you about your thoughts on Innocent Bank. What is it that you've made of these, discrepancies in their accounting balances, estimating an adverse impact of nearly about 2.35% on their net worth as of December 2024? We've of course seen the stock take quite a bit of hit yesterday itself when Sumant Kanpalia's extension got shortened to 1 year and not 3 years. But other than that, now that it seems that in the interim, IndusInd Bank is not going to be really the preferred one, which of the private banking names do you prefer right now if were looking to add positions in this current market?
I think it's a challenging activity, I think, business-wise for most of the banks. On one side, I think they have to cope up with the technology front for reaching out to their customers and efficiently processing the loans and collecting the deposits. On the other side, I think make sure that I think they don't end up getting into the NPA trap, at which otherwise I think most of these companies are quite vulnerable to. In my viewpoint, I think currently as it stands today, I think the likes of Kotak, likes of ICICI and Axis in that order, probably I think they remain relatively better on the front end technology. They are relatively better in processing the loan. They are relatively better in protecting their margin, the NIMs, in my viewpoint. And that's where I feel more confident about them. So HDFC remains the largest within the corporate sector in the private sector. Still, I think the front end part, the fintech part, as we want to call them as, I think is still not as much friendly as I think one would like it to be. SBI certainly within the public sector framework, I think is the best within the lot. But if my choice has to be there, today I think I would prefer to go with the Kotak and the ICICI. They relatively remain strong, both from the corporate side of the activity as well as from the tech side of the activity where they're processing the business, I think, quite efficiently as I see it.
I'm just looking at some of the jewelry stocks and I don't know what's wrong here, guys. I mean, look at Kalyan Jewelers, completely smoked, just smoked. Forget about, this entire halabaloo that, okay, there's one fund which has a large exposure and this happened, that happened. I don't know. Let's not just go by hearsay. But in 3 months, the stock has fallen 45%. Then you have Senco. Corporate governance issues have come out. This company, I think, went public in 2022 and 74%. PC Jeweler just went bankrupt and it is again down 92% in 3 months. So Deven bhai, they are in the business of selling gold, right?
Yeah.
सोना बेचते हैं, ज्वेलरी बेचते हैं. And look at the stock market, how the stocks are getting punished because they simply do not follow governance standards. I mean, how can somebody who's selling gold, jewelry, a promise of future, do this to shareholders?
Challenge, Nikunj, I guess I think in most of the businesses we are going to see this challenge. See, on one side, everybody wants to scale up their businesses very fast. they are trying to, and I'm without singling out any single company at this point of time, but I think trying to capture the market share. And at the same time, I think get into a business model which is more of a trading business model, which cannot be a sustainable business model from the profitability point of view. So then comes, I think, some of those shortcuts which gets applied on when we call them as corporate governance issues thereafter. But those shortcuts are compulsion because of, I think, their compulsion to drive the market share. And that's where probably, I guess, I think some of these companies are very vulnerable. They have been, I think, historically into this business, so they know their customers well, they know their business well. However, when you professionalize this kind of businesses, my experience says I think you are required to train the skill set which you otherwise want. If you don't get that one in place, then probably I think these issues will come up. And certainly, I think we have always refrained from getting into this particular space because of these concerns which I just now had. And I think this is now coming on the surface. Unless you get, I think, a completely skilled management coming into this kind of businesses and take this entire activity away from promoters responsible only for the policies and implementation thereafter. I think then only I think these businesses can be trusted upon. Otherwise, I think you'll always have such kind of jerks coming in between in these businesses. And that's where investors don't feel comfortable buying into them. I think momentum is a different issue, but long-term investment certainly requires certainty.
Okay, Deven bhai, you want to comment on that? IPOs are dried up, promoters are not selling. Naresh, I never see you laugh as whatever happens. You know, Deven got the joke, but Naresh Mirani never laughs. Whatever happens in terms of work
He's
player.
paying attention to his work, not to you.
Because it is difficult, I think, get a little serious after you break jokes,
Okay, Deven bhai. Promoters are not selling and IPOs are drying up. Two reasons why liquidity should normalize.
I believe that I think probably everybody ended up selling the IPOs largely because of the fact that I think they were having the advantage of, I think, higher valuations. Today, I think that advantage has gone. In fact, I think that people are extremely concerned about getting into the high value stocks. And that's where many of the companies, even though they have moved ahead with the IPO, I believe that I think they are right now on a defensive till the time market recovers, including the merchant bankers. They are asking them not to venture into the market immediately till the time market stabilizes. So that's what I gather. But I think there will always be a scope for good quality stocks in the market, and if systematically marketed well with the investors, I believe that I think those companies would definitely have a strong investors into their portfolio, which normally every promoter wants.
Right. Okay, they've been so good having you on the show today with your thoughts. Good to speak with you as always.
Thank you, Aisha. Thank you.
If you like this video, then like, share and subscribe to ET Now.